Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Remember, today there is a live cast training session for the Wave Tech research tool starting at 4:30 Eastern Time, running about an hour and a half. If you missed Saturday's meeting, this is your opportunity to get caught up. Overnight, we had a snafu in the markets where it was reported that Navarro had said that the trade deal was over, when indeed what he was talking about is that phase 2 trade deal is over and that they don't trust the Chinese. It was perceived that phase 1 was being negated, and the futures declined 45 handles, only to snap back like nothing happened, because it didn't. This type of action just goes to show how sensitive the markets are to the slightest amount of news. As we continue to go through this week, today is going to be a very light day from a news standpoint as we work toward the big reports with GDP and the jobless claims that are due to come out. For today, we have existing home sales. This will contrast what came out on Monday of the new home sales, which showed a 9.7% decrease. This was in line with what was expected, and this was the third month in a row with negative numbers. But once again, market participants continue to look forward, and they don't take the negative news as negative right now. They continue to look forward to the recovery, and all the sentiment is based upon the recovery and the perception, not on any reality, especially in reports that we're looking in the rearview mirror. We're not going to gain much from any of these reports coming out, as most of them are even coming in better than expected. But even if they come in worse, market participants don't seem to care right now just about anything fundamental. Some bright spots in the markets for Monday was crude oil moved higher up to around the $40 level. We're continuing to see that recovery in the oil market, which is bringing in even more optimism in the markets. As I discussed in last night's video, I don't see any major declines here, and in fact, I'm expecting to see further advances to the upside as there's some new probabilities starting to come into play. Tuesday and Wednesday's actions likely to represent somewhat of a continuation of this sideways choppy range, maintaining the support levels as we wait for the big number on Thursday to come out with GDP. The GDP number that has the potential to spike volatility, but it looks like the bias is to the upside at the moment. I will go through in the technicals here in a minute and talking about the configuration, as it looks like we are trying to complete a downward sequence and start yet another rally. There's not a lot of great expectations for anything fundamental right now, as the technicals will continue to drive these markets. Let's take a look at the charts and see what they're telling us for tomorrow. Going to start with a very short-term chart with the 5-minute futures contract. And you'll see in the middle of the page here, this was the dip after the Navarro comments. They came down and we shot back up. Now this is a 5-minute graph, so it took about 15 minutes to come back up after spending about 20 minutes down. And what occurred was that the news was negated and everybody found out everything was just like it was. You can see the market traded right back in the range. You see the market grid expand and get this volatility band and then just go flat line. So the next event that we'll see on the overnight futures will be when London opens, which is about 2 hours from now. I continue to cover the trade that went on May 4th at 28.40. This trade is continuing to hang on just by a very small margin. Today, the 30.92 level will be the key level, and that number will continue to move up over the next several days. Now, the futures are showing up 200 right now, but they did rally after the cash close, so we're right now expected to open about 400 to 600 higher. As I mentioned in the opening comments, the bias is to the upside. Even though we have PPM1 is now at 0.26, it is dissipating very quickly. The market has moved back above the 10-period moving average, and meanwhile, PPM1, PPM2, and 3 remain at the 0.20 level, just slightly below trend level, but that is pretty typical when you're in a consolidation range. As I mentioned last night, the declines that I was expecting from last week's reversal was very moderate. On the futures, we did print down to 30.60 Sunday night's low was 30.27, but this thing snapped back because of this snafu in the news that we saw overnight. The pattern, however, continues to suggest that we're about to start another leg up. We have not confirmed this yet, and there will need to be a close above the 3149.25 level. A close above that level on the futures will signal higher prices. Let's take a quick look at the cash market. And cash has a similar configuration, but the key number here is a close over 31.31. A close above that level will signal a move toward the 31.57 level and test the highs of last week. The key will be over the next couple sessions whether this ppm will move back minus 0.15 and that the closes will remain above the 10-period moving average. Right now that's 31.07. We closed above that yesterday. We're likely to maintain that level over the next couple sessions. I mentioned in the opening comments that the next two sessions were going to be critical. The 30.87 levels, the critical level on the cash market, close below that level, will trigger a sell of that position that we've had on since May 4th. The weekly charts are going to drive the narrative as we move through the balance of the week. The market grid for the weekly, S1 is 30.49. I discussed that number in detail. I also discussed another number, which was the 31.84 level. That's going to be key, and I don't see us getting below that level. We saw again a reversal pattern, exactly how we started off last week, where we had extreme weakness on Sunday night. We came into Monday, there was a rally off the lows and a higher close. We've seen that for the second week. This tells us that R1 is expected 31.46. I just talked about if we close over 31.31 on the cash, it will see a test of last week's high. And this potentially could move us back toward the R2 number of 3,200. If you look down below, you'll see that the ppm 2 now has clearly broken through its second derivative, and ppm 3 has not yet. A close above 31.46 will be enough to start this process moving forward. Most likely what we're going to see is a retest of the highs at the 32.33 level, and there's possibilities for the market to move much higher. But my expectations is that we will see at least 3,200 this week. The expectation is to move through R1 on a weekly grid and move towards R2. I don't think we'll get up to R3, which would be a high over last week. I think we'll stay within this range, but I do believe that we'll take out last week's high at the 31.55 level. It's very evident that the NASDAQ continues to be the leader, and it accelerated again into new highs as the patterns continue to accelerate. If you look at ppm1, a plus 1.43, ppm2 is a much stronger formation than it is on the S&P as we see it through the first and second derivative, and ppm3 is clearly signaling an uptrend. And we're looking at ppm1, as I mentioned, 1.43 positive, ppm2 0.62, and ppm3 0.67. Anything above 0.25 is a trend. So this is 2 times and 5 times the normal trend. This is a very robust trend, which tells us there's a very small probability of less than 10% for any major declines to come from this position right now. The support levels will continue to hold as we go through the next several days. Daily chart, we've got the moving average. This is the NASDAQ futures 10-period moving average at 919.15, with the upper range of the market grid today for a potential to go to 10,233 with R3 at 10,290. So there's still a lot of upside in this market. PPMs are very interesting on the short-term NASDAQ. As you see, ppm1 is 0.18, ppm2 0.35, and ppm3 0.35. You'll notice another characteristic, and I discussed this the other night, that the ppms are trading in this very flat line here. ppm3 is slightly below this. This formation is what it looks like when we're maintaining a trend. When you go through a long consolidation like this, the next possibility, a resurgence of the PPMs to move higher and break through these levels. These peak levels are going to remain important. I've drawn arrows above these levels, but really what I'm talking about is just breaking back above the first and second derivatives here. And remember, I talked about this in the live cast last week at some point, that momentum precedes price. Let me show you that just one more time. So we get the big boost of momentum, and this momentum stopped here. This is the level 2 trend. We saw momentum stop here, and then the last trend of the PPM 3 came in here. And each one of these signaled to push the market higher as the trends continue to evolve. Then we go into this mode that we're seeing right now, which is completely flat and maintaining enough momentum, which keeps the price pressure momentum just enough to keep this trend climbing higher. There's no breakdowns. There's nothing there that tells us the market is about to reverse at this time. People can talk about overbought, all kinds of turnarounds. As I discussed last night, these markets are in firm uptrends. They're not going to turn around at this moment. Going to cover two more markets very quickly. The first is the Dow. I talked about last week the Dow is going to move back towards the 200-day moving average, which it has. The patterns are setting up on the PPMs continue to be bullish, which tells me Dow is going to challenge its 200-day moving average and potentially move above it. At the moment, we're seeing PPM 1 starting to accelerate. It's still not in trend mode. PPM 2 and 3 are negative, but showing signs of bottoming, which is the predecessor to the next rally. Just drawing in the potential pattern here, we have this downtrend retracement that we've already completed. As long as we hold above the 0.618 number, we're going to see this move back toward the 99 handle. I've drawn the arrow up to 100. Up to that 40 period moving average is the likely move, which right now is 98.50. So we're going to see this continue to move up. I don't see it going much above that level. This bottoming pattern is just about complete and should set up this next move. With the PPMs formed like they are, there's no way we're going to see another surge down in the Dow. We're going to see stability, whether we get above that 200-day moving average or not. The patterns that are set up here tell us that we will. The final market that I'll cover tonight is crude oil, and this trend that we've started just continues to move higher. We've remained above the key moving averages, just like the other PPMs that I talked about. We're slightly downslope, but it's remaining in a plus 30. PPM 2 is a plus 67. PPM 3 is incredibly strong at 1.38. So this trend that we're seeing is going to continue. The major support at 34.80, which is the 40 period moving average, but most likely you're going to remain in the market grid and continue to move this market higher over the next several sessions. And I discussed before that the probabilities are that we will continue toward the $44 level, which will be the 21-week moving average. And this is where this market will finally find resistance. And then we will set up a pattern between 38 and 45 and consolidate for probably 2 weeks. All this action in crude oil continues to be this perception of this recovery of the economy continuing, in spite of the mixed numbers, in spite of all the COVID stories that keep coming out. This tells us that stability is what's next. And this most likely equates into a stable equity market. This is the stability that the Fed wanted in the markets. They've got it. Until something derails all of this, we're going to continue along this path. Have a great day trading. We'll talk to you tomorrow night.